company like Bank of America is going from 14 to 24 over the past 3 or 4 months. So we're going to wait on pullbacks and use discretion and discipline when we buy something. But I think if we look over the next 18 to 24 months, I think it's the stocks that have been leading the way since the election, and that would be your banks, specifically your regionals. It would be your infrastructure plays. It would probably be some of the stocks also that are going to get a bump from higher interest rates other than the banks, like credit card companies. I think technology will play a big role also. The building out really of the technological infrastructure of America for autonomous cars, for the internet, nationwide, those types of things. So some of your older line tech probably, and maybe like a Google, which is now known as Alphabet.
The financials are probably going to do relatively well, especially the regional banks, as we look forward. Given the fact that they are not going to have the same level of constraints that they've had in the past, as well as an increase in interest rates, will probably benefit their bottom line. Secondarily, look at technology. Technology's been, you might say, fairly beaten up, but we would say just focus on the fact that it's been beaten up since the election. Names like a Microsoft. Maybe you look at a name like a Facebook or an Apple computer.
There's a lot of value in financials with the deregulation. In the banks and the lowering of the corporate tax rate. I think they could still have a ways to run. They didn't do much since I've been here, working here since 2011, so they have been up about 17, 20% so far since the election, but we still think that maybe they'll settle down but still have a ways to go.
The area that's taken a breather in 2016 in general has been some of your growth companies, Nike, Starbucks, Visa, and MasterCard to a certain extent. I think they'll do okay as investors look for balance in their portfolio and also recognize that a couple of those names like Nike and Starbucks and Visa will also benefit from a more rapidly growing economy as a consumer would do well. So I think some of those areas will do well. We're also sitting and seeing what the biotechs and pharma does, whether Donald Trump attacks drug pricing or he's got bigger fish to fry with some of the infrastructure plans that he has in tax reform, that he puts drug pricing on the back burner. Those are under pressure also right now because there is some tax loss selling in the biotechs. And I think early on in the year, you'll get a little bit of a pullback in the stocks that have done real well since the election, and probably a little bit of a positive bump for some of those that have lagged during 2016.